I just want to let everybody know that we're also on a couple of the social media networks right now. We're on Twitter. Those of you who like to tweet, actually our name on Twitter is Health Biznet. That's Health Biznet. We're also a discussion group on LinkedIn. That's under the Healthcare Business Network radio show. You can find us on LinkedIn under that group. And we're also on Facebook under the Healthcare Business Network. So if any of you are looking for us out there, in addition to our website, we're here with our guest, Mickey Herbert. We're talking about the impact of healthcare reform, Obamacare, on the private insurance industry here in the United States. So, Mickey, really, up to this point, since the Patient Protection Act was passed back in 2010, have there been any HMOs that have announced that they are actually going to be leaving the business of medical insurance coverage?
Well, not exactly, although what we clearly are seeing, I gave you the Harvard-Pilgrim-Tufts merger as an example of health plans that I think basically now, I'm not sure it's true of those two, but are basically feeling kind of overwhelmed by the enormous compliance requirements of the new act. And it's just, this new act is creating 183 new agencies, boards, and commissions. And it's just overwhelming. 2,700-page bill. It's very intimidating to health plans, frankly. So, but instead of just trying to switch to other businesses, what I'm seeing much more of is health plans looking to merge and get bigger so that they can deal with this. When Sarbanes-Oxley was passed back in, I think, 2001, that bill was 66 pages long, and yet it turned the financial world upside down. This law now is 2,700 pages. So we are going to see a lot more merger and acquisition activity in the health plan space, if you will. We're also seeing it, by the way, on the provider side. We're seeing hospitals affiliate with each other. We're seeing physician groups become larger and larger. And frankly, I don't think that was the intention of the act, was to, in my opinion, harm competition by ending up with fewer and fewer players.
Well, and that would be a troublesome trend. And right. The government is really supposed to, through the Antitrust Act, the Sherman Antitrust Act, it's supposed to be watching out for types of mergers which lower competition. So you would find this to be a troublesome trend then, where you're having all these mergers among all these private insurance carriers.
I do think it's something that bears watching. We used to have 15 health plans in Connecticut, for example, and now we have 5, and only one of those, the health plan I was most recently with, Connecticare, that is not a national player, Connecticar is a regional player, but the other 4 plans, Aetna, Cigna, the Blues, and United Health, are all great big national companies. And I sort of long for the days when we had many more local plans competing in the marketplace.
What private market remedies would you recommend? Now, for example, you've heard the Republicans talk on many occasions about allowing insurance carriers to cross state lines to sell, medical insurance. Would this be a good type of market remedy to help control cost? Are there other types of market remedies that you can think of that would work well?
The crossing state lines is a much bigger challenge than a lot of people realize, because if you let a health plan that's licensed in Alabama or Utah, where there's very few mandated benefits that are required to be provided, and you allow that health plan to compete in Connecticut, where a Connecticut plan has got to provide 60, 70 benefits that are mandated by the state over many decades, actually, you really create an unlevel playing field, and it's not clear that would work well in the long run. At a minimum, it would require the federal government to start overseeing benefits and rates and whatnot, whereas up until now, that whole process has been basically left to the states to run. I do think a remedy that should be employed, and some of this is inside baseball, but the current law, the Patient Protection Act, requires this thing called a medical loss ratio, which health plans have to spend a certain percentage of their money on medical claims, and if they don't spend that much on medical claims, they've got to give money back to the consumer. Well, that may sound good, but it's no way to operate in a free market, because you're trying to manage the individual cost components rather than let the market function. And frankly, health plans may end up with a motivation to let healthcare costs go up, so not to run afoul of the medical loss ratio requirements in the law. So it's kind of that falls under kind of the law of unintended consequences. Which
you find all the time especially when you pass 2,000-page legislation,
right.
There are all kinds of hidden things in there,
yeah.
which many legislators didn't even know were going to happen.
Right.
I mean, how many, realistically speaking, how many congressmen and senators actually read this entire act? I don't think there's anybody out there.
Well, the famous statement by the Secretary, by the Speaker of the House, was we got to pass this bill so we can find out what's in it. That was something.
Yeah. Now, why do you think now in the last week or so there have been bills introduced in the House of Representatives regarding tort reform, which would put a cap on pain and suffering, unlimited damages for, if a doctor makes a mistake, unlimited economic damages, however, pain and suffering, which has really caused so much of the increase in medical malpractice insurance, and then forces doctors to request unnecessary tests, which really increases costs to insurance carriers and increases healthcare costs overall. Why was such an obvious thing like tort reform ignored when the Patient Protection Act was passed last year?
Well, you use the word obvious. The obvious answer is the trial lawyers didn't want this, and most of the legislators in Washington are in fact lawyers, and the trial bar has really got an unduly influential role within the party that's been in control in Congress the last 2 years. And I think that's probably the biggest reason. But there's also an allegation, which I think is false, that defensive medicine is not a big driver of healthcare costs in America. But I tell you, I have worked with hundreds, even thousands of doctors in this region over the last few decades, and I don't know a single doctor in this region that, if he's being honest with you, won't admit that he practices defensive medicine, that he simply orders more tests than are necessary because he doesn't want to deal with being sued unjustly.
Well, you look at it, let's just take the OBGYN, who really has a clean record, no problem, does an excellent job. I mean, they could be paying six figures in medical malpractice insurance.
That's right, and that's why a lot of them don't even deliver babies anymore.
Very good point.
Yeah.
Now, in your estimation, what do you think, and this goes back to what we were discussing earlier about private market remedies, but if you could choose, if you only had the opportunity to implement one single market reform, what do you think that would do? What would you do? What would be that one single market reform that you would select?
Well, maybe I'd answer this question just a little bit differently. What is maybe the one thing that would have the most dramatic effect on reducing healthcare costs? Because that's the big challenge. And I would say we've got to figure out a way to incent people to live healthier lifestyles. I mean, at Connecticare, we know that 2/3 of our claims were driven by the fact that people in America don't live especially healthy lifestyles. So we have really got to emphasize wellness, attack obesity, attack smoking, attack inappropriate use of drugs. And if the reality is, it takes a long time to get a big bang for the buck there, but we could really drive down healthcare costs if we could, in every way possible, encourage people to live healthier lifestyles. And I would put that as number one.
Mickey, I want to first of all, thank you again for taking the time to be on the Healthcare Business Network. I am sure our listeners out there are going to have a lot of interesting things to think about after our discussion and a lot of comments to it. Just to let our audience know out there, if you'd like to contact Mickey Herbert, his email address, Mickey, you have your email address there?
Yeah, it's very simple. It's just Mickey Herb, MICKEYHERB, at AOL.com. And I'm delighted to respond to anyone who emails me.
Absolutely. And again, I want to thank you so much for coming here and giving of your time here to be on the Healthcare Business Network. I also want to let our listeners out there know that if you have any questions, you have any suggestions for program topics in the future, you can always reach me. That's Ron, R-O-N, at hbnradioshow.com. That's Ron at hbnradioshow.com. And as I said before, you can listen to all our shows at www.hbnradioshow.com. That's hbnradioshow.com. I want to thank all of our listeners out there for taking the time to listen in this week. We'll be back next week. And again, I want to wish everyone good luck, and may the good news be yours.